Welcome back, everyone, to another deep dive, this time into the Let's Grow Movement Market Update for March 2025.
Yeah.
Looking at the U.S. real estate landscape, and we're covering both residential and commercial.
Yep.
This is going to be pretty dense.
It is a lot of information.
But stick with us, because we're going to try to unpack it all in a way that makes sense. You know, kind of like your shortcut to understanding what's happening out there right now.
Exactly.
What are the big trends we should all be paying attention to? And what does it all actually mean? Like, how can you use this information?
Yeah, that's the goal, right? To give some insights that are actually actionable.
Yeah.
So with this March 2025 update, it's really interesting to me because there are a lot of different stories that the data is telling.
Okay.
So, we can't just paint everything with one big brush.
Got it.
It really is like a case-by-case basis depending on, the region, the type of property.
So it's not a one-size-fits-all situation.
No, not at all.
For sure. And on the residential side, I'm seeing some head-scratchers already, just in terms of the numbers. Like what? Well, like existing home sales, for example, in February.
Okay.
They actually jumped up 4.2% compared to January.
Oh, wow.
Yeah. So that brought us to an annual pace of 4.26 million.
Okay.
So on the surface, that kind of sounds like good news, right?
Yeah, it sounds like things are picking up.
Right.
But we always have to look at the context, right?
Yeah.
So when you zoom out and compare that February figure to what was happening in February of the previous year,
Okay.
you see it was actually down 1.2%.
Oh, so it's lower than last year.
Exactly.
Yeah.
So it's more of a, a little step forward instead of this huge leap.
Got it. So like month-to-month momentum,
Yes,
but not quite the same story year over year.
precisely.
Okay, so mixed signals on the sales front.
Yep.
What about prices? Because
Yeah.
those seem to be telling a slightly different story.
Okay, what are we seeing?
Well, the median existing home price for February hit a record high for that month
Wow.
at $398,400,
Okay.
which is a 3.8% increase compared to a year ago. And this is like 20 months in a row where we've seen this year-over-year gain in prices.
So even though sales are kind of, going up a little bit, down a little bit,
Yeah.
prices are still going up.
Still climbing.
Interesting.
So I think this really highlights how important it is to look at different data points.
Yes.
And not just like focus on one thing because it's not the full picture.
Right. It's like a puzzle.
Yeah,
You have to look at all the pieces.
exactly. And speaking of looking at different pieces of the puzzle, one of the numbers that really jumped out at me was the inventory data.
Oh, yeah.
So nationwide, we had about 892,000 active listings in March of 2025.
Okay.
And that's a huge increase, 28.5% compared to last March.
Wow, that is a big jump.
It is. So suddenly it seems like buyers have a lot more to choose from.
Yeah, so that could mean that they have a little more bargaining power
Right.
in certain markets.
Yeah,
But again, got to look at the context.
of course.
So even with this really big jump,
Yeah.
we're still about 20% below where things were in March of 2019 before the pandemic.
Oh, wow.
So it's better.
Right.
It's a step in the right direction for buyers, but we're still dealing with historically low inventory.
Yeah. So we're not out of the woods yet.
No, not quite.
With all this new inventory coming online, what's the pace of sales like? Are these
Mhm.
homes flying off the market still, or are things slowing down a bit?
It's definitely not as frantic as it was maybe a year or two ago.
Okay.
So the average property in February was on the market for 42 days
Okay.
compared to 38 days the year before.
So a little slower.
Yeah, a little slower.
Yeah.
And that just shows that, demand has cooled down a bit.
Right.
Buyers have more options, so they're taking their time making decisions.
Yeah.
And right now, the supply of homes based on the current sales pace is about 3.5 months,
Okay.
which is up from 3 months last year, but still under that 4 to 6 month range that's considered balanced.
Right. So not a buyer's market, not a seller's market.
Exactly. Somewhere in between.
Okay.
It's becoming a bit more neutral.
Interesting. So if we're seeing this slight slowdown in sales and a little more balance in inventory,
Yeah.
what's going on with buyer demand? I mean, are people still interested in buying homes?
Yeah, there's still interest, but it seems like affordability is a big roadblock.
That makes sense.
But one thing that I thought was interesting is that first-time buyers made up a larger chunk of the sales in February.
Oh, really?
Yeah, they were 31% of the sales
Okay.
compared to 26% a year earlier.
So is that a good sign?
I think it might show that some of those people who have been waiting on the sidelines
Yeah.
are finally able to buy.
To get into the market.
Yeah.
Okay.
But at the same time,
Yeah.
we can't ignore the fact that all cash buyers were still almost a third of all transactions.
Oh, wow.
Yeah.
So investors and people with a lot of cash.
Yeah. Those folks aren't as worried about mortgage rates.
Right.
So there's still a big force in the market.
Interesting. So even though we're seeing some first-time buyers getting in, there's still a lot of competition.
Definitely.
Yeah,
And that's something to keep in mind.
absolutely. Now let's talk about those mortgage rates because they seem to be holding steady for now,
Yeah, looks like they've stabilized in that mid 6% range.
as of early April.
Right.
So how is that affecting affordability? Because that's a pretty high rate historically.
It is high. And when you pair that with the high home prices we talked about earlier,
Oh,
yeah, the typical monthly payment for a new buyer this spring hit a record of about $2,800.
wow.
And that's 5% higher than last year.
So even though rates aren't like skyrocketing at the moment,
Right.
the combination of the current rate and the high prices is really squeezing people.
It is making it really tough for a lot of potential buyers, especially those who don't have a ton of money to put down.
Exactly. Okay, so with all this talk about high prices and limited inventory in the existing home market,
Yeah.
what's happening with new construction?
Well, it seems like builders are stepping up to try to fill the gap.
Okay, how so?
Well, new single-family home sales in February of 2025 were up 5.1% year over year,
Okay.
reaching an annual rate of $676,000.
So a notable increase.
Yes. And one thing that builders can do that existing homeowners can't
Yeah.
is offer incentives,
Right.
like help with closing costs or buying down mortgage rates.
And those can be pretty enticing for buyers right now.
They can be, especially in this environment.
For sure. And I'm curious about the price point for new homes
Okay.
because we know existing home prices are really high.
Right.
So are new homes just as expensive?
Well, the median price for a new house is actually a little bit higher than for existing homes.
Yeah.
It's $414,500.
Okay.
But here's the interesting part. Their price is actually down about 1% year over year.
Oh, so maybe builders are adjusting to try to stay competitive.
It could be. They might be trying to meet buyers where they are in terms of what they can afford.
Interesting. And what about the supply of new homes?
Well, that's the good news. There's a lot more supply in the new home market than in the existing home market.
Really? How much more?
In February, there were about 500,000 new houses for sale,
Wow.
which is an 8.9-month supply.
So more than double what's available in the existing home market.
Exactly.
Yeah.
So builders have a lot of homes in the pipeline, and they're actively trying to get them on the market.
That's encouraging.
Yeah, and we're seeing that in the housing starts numbers, too.
Yeah.
Total housing starts jumped 11% in February from January,
Okay.
and single-family starts were up even more, 11.4%.
Wow. So builders are busy.
Yeah, but one thing to note is that building permits,
Yeah.
which are a good indicator of future construction,
Right.
those were actually down about 7% year over year.
So maybe a little bit of caution creeping in.
Yeah, I think they're still feeling things out, seeing how the demand holds up.
That makes sense. Okay, so we've covered a lot of ground on the residential side.
Yeah, we've hit a lot of the key points there.
I think so. Let's switch gears now and talk about commercial real estate.
Okay.
Because it seems like there's a whole different set of dynamics playing out there.
Yeah, commercial real estate is definitely its own animal.
Right, and it's not all sunshine and roses.
No, there are definitely some sectors that are struggling more than others.
For sure. But there are also some bright spots.
Right. So it's a mixed bag.
Exactly. So why don't we start with maybe the elephant in the room, which is the office sector,
Okay.
because that's been making headlines with those really high vacancy rates.
Yeah, office space has definitely been a hot topic.
Right, and it's not hard to see why. I mean, nationwide office vacancy ended 2024 at almost 19%.
18.9% to be exact.
Right.
And that's pretty close to a record high.
Yeah, it's not a good look.
It's not great. But we did see a tiny improvement in the last quarter of 2024.
Okay, so maybe a glimmer of hope.
Maybe. But I think the big story is that companies are really rethinking how they use office space.
Right, with all the hybrid and remote work.
Exactly. They don't need as much space as they used to.
And they might need different kinds of space.
Right.
So it's not just about how much square footage you have anymore.
Exactly. It's about the quality of that space.
Which brings us to this idea of flight to quality.
Yes, that's a big trend we're seeing.
So what does that mean for people who aren't super familiar with the commercial real estate lingo?
Basically, it means that tenants, when they do need office space,
Yeah.
they're being really picky.
Okay.
They want the best of the best.
So like the newest buildings?
Yep, modern amenities, good location, easy to get to.
Prime locations.
Prime locations, exactly.
Okay.
And that's why we see this difference in vacancy rates.
Right.
So for those top-tier Class A buildings, the vacancy rate is lower. It's about 15.3%.
Okay.
But for older buildings or those in less desirable locations, that vacancy rate jumps up to 19.2%.
Wow. So there's a clear preference for quality.
Definitely.
Oh,
And that's putting a lot of pressure on landlords who own those older, less competitive buildings.
I bet. So with all this vacancy, what's happening with rents? Are they going down?
Well, it's kind of tricky.
How?
Asking rents have actually gone up a little bit.
Really?
Yeah, about 0.6% year over year.
So how does that make sense?
Well, you have to look at effective rents.
Okay, what's that?
Effective rent is the rent that tenants actually pay
Okay.
after you factor in all the discounts and incentives that landlords are offering.
Oh, like free rent periods.
Exactly. Or money towards building improvements.
Right. So landlords are basically giving deals to try to fill their spaces.
Exactly. And that's why effective rents are under pressure.
Interesting. So even though the asking rents are up slightly, the actual rents being paid might be lower.
Exactly. And there's another factor at play here.
Okay, what's that?
Sublease space.
Oh, right.
There's a ton of sublease space available right now. Almost 4% of the total office inventory.
Wow. So companies are trying to get rid of space they're not using?
Yep. And that adds even more competition to the market.
Definitely. And it's not surprising that with all this going on, new office construction is basically starved.
Yeah, who wants to build a new office building when there's so many empty ones already?
Right, exactly. Okay, so that's the office sector, which is clearly facing some big challenges.
Yeah, some big headwinds there.
For sure. Let's move on to industrial real estate.
Okay.
So warehouses, distribution centers, all that good stuff.
The logistics world.
Exactly. And we've been hearing that this sector is actually doing pretty well.
It is. But things are starting to shift a little bit.
Okay, tell me more.
So the national vacancy rate for industrial space went up to 6% in the fourth quarter of 2024,
Okay.
which is the highest it's been since 2015.
So still pretty low historically.
Yeah, but it's an upward trend, which is something to watch.
For sure. What's driving that increase in vacancy?
Well, a lot of it has to do with new construction.
Okay.
2024 saw a record amount of new industrial space completed.
So the supply is growing quickly.
Yes.
Yeah.
And even though demand for industrial space is still strong,
Yeah.
the rate at which tenants are absorbing all that new space is slowing down.
Okay.
In fact, the absorption rate in 2024 was the lowest it's been in a decade.
So the new supply is outpacing the demand.
Exactly. And that's starting to put pressure on rents,
Okay.
which had been rising pretty rapidly in the past.
Right.
So now we're seeing rents flatten out in some markets and even dip a little bit in others.
Yeah. So landlords are getting a little less picky.
Yeah, they're prioritizing occupancy.
That makes sense. Okay, what about retail? I'm curious to hear how that sector is holding up, especially with the continued rise of e-commerce.
Yeah, it's actually a pretty good news story.
Really?
Yeah, retail has been surprisingly resilient.
Okay.
So the availability rate for retail space stayed really low at 4.7% in the fourth quarter of 2024.
Wow, that's impressive.
It is, and one reason for that is that there hasn't been a lot of new retail construction in recent years.
Right, so the supply is pretty limited.
Exactly. And while we have seen some store closures and bankruptcies,
Yeah, of course.
overall, the demand for well-located retail space is still strong,
Okay.
especially in areas with a healthy consumer base.
So it's all about location, location, location.
Always. And this limited supply and steady demand has allowed landlords to increase rents.
Okay.
Rents were up about 2.5% year over year on average.
So not a huge jump.
No, but it shows that the sector is holding its own.
Definitely. And are there any types of retail properties that are doing particularly well?
Yeah, neighborhood shopping centers,
Okay.
anchored by those essential businesses like grocery stores,
Hmm.
pharmacies, things that people need no matter what.
Right.
Those are performing really well.
Makes sense. All right. Let's wrap up our commercial real estate overview with the multifamily sector, which I understand has also seen a bit of a resurgence.
Yeah, apartments are back in demand.
Okay, tell me more.
So in the second half of 2024, we saw a big rebound in demand for apartments,
Okay.
and that led to record high absorption in the fourth quarter.
So a lot of units were rented out.
Exactly. And the national vacancy rate for multifamily dropped down to 4.9%.
So pretty tight.
Yeah, pretty healthy.
Yeah.
And this is despite the fact that a record number of new apartments were built in 2024.
Oh, wow. How many?
Over 450,000 new units.
So a lot of supply coming online.
Yeah, but it seems like the demand is keeping pace.
Okay.
Now, rent growth was pretty minimal over the past year,
Okay.
only about 0.5%.
So not much movement there.
No, but with vacancy rates tightening up, we expect to see rent growth pick up steam in 2025.
Okay, so maybe some upward pressure on rents on the horizon?
Yeah, that's what we're anticipating.
All right, so we've looked at the trends in occupancy, vacancy rents.
Yep.
What about the financial side of things in commercial real estate?
Okay, so you're talking about the capital markets, how much money is flowing into the sector.
Exactly. And also, how are property values being affected by all this?
Right. Well, we did see a nice rebound in investment volume in the fourth quarter of 2024.
Okay.
It was up about 31% year over year.
So investors are getting back into the game?
Yeah, they're starting to see some opportunities.
Okay.
And cap rates, which are a way of measuring the return on a property investment,
Right.
those seem to have stabilized after some earlier volatility.
So is that a good sign?
It could be. It suggests that buyers and sellers are starting to agree on prices,
Okay.
and the debt markets are also showing signs of life. Yeah, more loans are getting closed, and the cost of borrowing is coming down a bit.
So some positive signs there.
Definitely.
Yeah.
But there's still a lot of caution in the market.
Of course.
And we're seeing a widening gap between the haves and the have-nots.
What do you mean?
Well, prime properties,
Yeah.
those in great locations with good tenants,
Right.
those are still attracting plenty of financing and investor interest.
Okay.
But older properties or riskier assets,
Right.
those are having a harder time getting funding.
So it's becoming more difficult to finance certain types of commercial real estate.
Exactly.
Yeah,
And that's something to keep an eye on.
for sure. What about new construction in the commercial space? Are we seeing a lot of new projects in the pipeline?
Actually, it's pretty slow right now.
Really? Across the board?
Yeah, pretty much, except for residential.
So apartments are still being built?
Yes. Multifamily is still going strong.
Okay.
But office and retail projects have pulled back significantly.
Right.
And even industrial construction is starting to slow down.
So a bit of a wait and see approach.
Yeah, I think developers are being cautious,
Yeah.
given the uncertainty in the market.
Makes sense. So we've talked about the national trends in commercial real estate,
Yeah, we've covered a lot of ground.
but as we know, real estate is all about location.
Absolutely.
So let's dig into some of the regional nuances.
Okay.
Starting with the residential market again. What are some of the key regional differences that we're seeing?
Well, the Northeast is definitely a standout performer.
Okay.
They're seeing the strongest price growth, around 10% year over year.
Wow.
And sales activity is holding up well.
So a strong market overall.
Yes. The Midwest is also doing pretty well.
Okay.
They have solid price growth, about 6% year over year.
Okay.
Sales are pretty stable, and those affordable markets are really competitive.
So if you're looking for a good deal.
Yeah, the Midwest might be a good place to look.
Okay. What about the South?
Well, things are a bit more subdued in the South.
Okay.
Price growth is slower, about 1 to 2% year over year.
Okay.
And sales volumes are actually down.
So some of those hot markets are cooling off.
Exactly. And inventory has increased the most in this region.
So more options for buyers.
Yes. And the West is a bit of a mixed bag.
Okay. How so?
Overall price growth is about 3.6% year over year.
Okay.
Sales are pretty flat,
Okay.
but some areas that saw price corrections in 2022 are starting to stabilize or even rebound.
Okay. So some pockets of strength.
Yes, but the Mountain West is still lagging behind.
So a tale of different regions.
Definitely.
And I think it would be helpful to break it down even further and talk about some specific metro areas.
Yeah, let's get hyperlocal.
Exactly. Because what's happening in one city could be totally different from what's happening in another city just a few miles away.
Absolutely.
Blech.
So where do you want to start?
Well, let's talk about some of the markets that are really hot right now.
Okay, so the Bay Area is definitely on fire.
San Francisco.
Yeah, San Francisco Bay Area. There's a lot of competition among buyers. Bidding wars are back.
Wow. So things are heating up again.
Yeah,
Hey.
definitely. And New York City is another one to watch. The metro area is seeing a surge in buyer competition, particularly in the outer boroughs and the suburbs.
So still a lot of demand in the New York area.
Yes. And if you're looking for more affordable options,
Yeah.
some of those Midwestern metros are really standing out.
Like where?
Places like Cincinnati, Columbus, Cleveland, Milwaukee,
Okay.
they're all seeing low inventory, steady demand, and rising prices.
So good value for your money.
Exactly.
Yeah.
And down south, Florida and the Carolinas are still popular.
Okay. Any cities in particular?
Yeah, Miami, Charlotte, Myrtle Beach,
Okay.
they're all seeing above average price gains.
And I'm guessing that's driven by population growth.
Exactly. People are moving to those areas.
For sure.
Yeah.
Now, what about some of the markets that are maybe not doing as well?
Okay, so Southern California is one area that's cooling down.
Really?
Yeah, places like San Diego and Los Angeles.
Okay.
They're seeing less demand. Homes are taking longer to sell, and more are selling below list price.
So bit of a shift there.
Yeah. And those Mountain West boom towns that were so hot during the pandemic.
Yeah.
Places like Boise, Austin, Phoenix, Las Vegas.
Okay.
They've seen a big jump in inventory, and prices have softened.
So not as much of a frenzy anymore.
Exactly. The market is becoming more balanced.
Interesting. What about those tech-centric markets that were lagging behind?
Well, many of them have stabilized.
Okay.
Seattle, for example, is actually picking up again.
Oh, wow.
Yeah. And Austin's price growth is moderated.
So a mixed bag, but some positive signs.
Definitely. All right, so we've looked at the past, we've looked at the present.
Yeah.
Let's gaze into our crystal ball and talk about the future.
Okay. Sounds good.
What's your prediction for the next 3 months?
Let's focus on residential first.
Okay.
What do you think is going to happen between April and June of 2025?
Well, we should see the typical spring uptick in activity,
Okay.
but I don't think it'll be as crazy as it was before the pandemic.
Okay.
More moderate.
So a more gradual increase.
Yes. And I think we'll see modest growth in home sales.
Okay.
Median home prices will probably stay near record highs, but the pace of growth will slow down.
So more of a plateau,
Yeah, I think so. And this should lead to a more balanced market overall.
which is good news for everyone.
I think so.
Yeah.
Yeah, mortgage rates will likely stay in that mid 6% range,
Okay.
which means affordability will still be a challenge.
For sure.
But inventory will continue to be higher than it was last year,
Okay.
probably around 15 to 25% higher.
So more options for buyers.
Exactly. And as a result, homes will probably take a little longer to sell.
Okay. So a slightly slower pace overall.
Yes, but still a healthy market.
Okay. Good to know. Now, what about commercial real estate? What are your predictions for the next 3 months?
Well, I think we'll mostly see a continuation of the current trends.
Okay. So what does that look like?
For office space, it'll probably stay sluggish,
Okay.
but we might see a little more leasing activity as companies figure out their long-term office needs.
Right.
Vacancy rates could go up a bit more,
Okay.
and landlords will probably keep offering concessions to attract tenants. We might also see more conversions of office buildings into residential or hotel space.
Interesting. So repurposing those empty offices.
Exactly. For industrial real estate,
Yeah.
I think activity will remain solid,
Okay.
and we should see positive absorption of that new space.
Okay.
But the overall vacancy rate might tick up slightly because of all the new construction that's coming online.
Right.
And rent growth will likely stay muted.
Okay. What about retail?
Retail should see a boost in leasing interest as we head into the spring and summer months.
Oh.
Vacancy and availability rates will probably stay really low,
Okay.
and rents will keep inching upwards.
So pretty stable outlook.
Yeah, I think so.
Yeah.
But it'll be important to keep an eye on consumer spending.
Of course.
That will have a big impact on the retail sector.
For sure. And last but not least, what about multifamily?
I think multifamily will continue to benefit from the strong demand we saw in late 2024.
Okay.
Vacancy rates could drop even further,
Okay.
and rent growth will probably accelerate.
So a good time to be a landlord.
Maybe, but it's also a good time to be a renter if you can find a place.
True, because those low vacancy rates mean there's not a lot of choice out there.
Exactly. And what about investment activity?
Yeah. What do you see happening on that front?
I think the rebound that started in late 2024 will continue.
Okay.
More deals will get done compared to last year. Buyers and sellers are finding ways to agree on prices.
Okay.
And industrial and multifamily properties will probably be the most popular.
Okay.
Cap rates might compress a little bit for multifamily and industrial,
Okay.
meaning prices will go up.
Right.
But they might go up a bit for office properties, except for those really prime assets.
So a little more risk associated with office.
Yeah, I think so. But
Mhm.
overall capital is becoming more available.
So that's a good sign.
It is.
Yeah.
It means that lenders and investors are feeling more confident about the market.
Definitely. Now, we can't talk about real estate without talking about the economy.
True. The two are inseparable.
Exactly.
Yeah.
So what are some of the economic wildcards that we need to be aware of?
Well, interest rates are always a big one.
Of course.
The Fed's decision to pause rate hikes is definitely helpful.
Right.
And there's a chance we could even see rates go down later this year.
Okay. So that would be good for affordability.
It would. But we also have to watch inflation.
Yeah.
If inflation stays high, that could put pressure on the Fed to raise rates again.
Right. So it's a delicate balance.
It is. And job growth is another important factor.
Of course.
A strong job market supports housing demand.
Right.
But if we see job losses, that could have the opposite effect.
Definitely. So a lot of moving pieces.
Yeah, the economy is always evolving.
It is.
Yeah.
But I think we've covered a lot of the key things to watch.
Yeah, we've given our listeners a lot to think about.
So to wrap things up, what does all this mean for the average person who's listening to this deep dive?
Well, I think the big takeaway is that the U.S. real estate market in March 2025 is a complex and nuanced picture.
Yeah.
There are definitely some challenges out there, like high prices, limited inventory in some areas.
Mm-hmm.
But there are also some opportunities, especially for buyers who are willing to be patient and strategic.
Okay.
And the commercial market is full of contrasts.
Yes,
Some sectors are booming while others are struggling.
for sure.
And it's all happening against the backdrop of a global economy
Mhm.
that is still finding its footing after the pandemic.
Exactly. So I guess the key is to stay informed.
Yes, absolutely.
Pay attention to the trends both nationally and in your local area,
Exactly.
and don't be afraid to ask questions.
Right. A good real estate agent can be a valuable resource.
Definitely. So if you're thinking about buying, selling, investing, or even just renting,
Yeah.
do your homework.
Yes. And don't make any rash decisions.
Right, because as we've seen, the market can change quickly.
It can.
But that's what makes it so exciting.
It does keep things interesting.
All right, well, thank you so much for joining me for this deep dive into the Let's Grow Movement Market Update for March 2025.
Yeah, thanks for having me.
It's been a pleasure chatting with you, as always.
Likewise.
And to our listeners out there, we hope this information has been helpful.
Yeah, we hope you've gained some valuable insights.
And as always, if you have any questions or want to learn more,
Yeah,
please don't hesitate to reach out.
we're always here to help.